Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY, the Qs, and IWM. This week I've also got 3 trade ideas for us to check out towards the end of the video, so definitely stay tuned. The reason there's not more is because that's simply all I'm seeing. There's really no reason to fill it with fluff, so 3 is the number. Let's kick off the S&P analysis with our sectors as we always do. Look at who was leading, who was losing, and where was the weight. Utility sector certainly led the pack once again today, up 1.58%, and the XLK for the tech sector is actually down at the bottom of the barrel, down 0.28%. And this again starts to raise some questions to me because, as we mentioned before, and as you may know, the utility sector is again a defensive sector. You usually see that as a more risk-off type of asset class. Same thing with real estate as well as energy. So again, on a nice green day here in the S&P's higher, why is it that some of these lighter weight, more defensive sectors are at the top of our list, whereas the XLK is down at the bottom of the barrel, right? Generally, you want to see the large and heavy weighted sectors, aka that XLK, support the move higher across the broad market. So throughout today's video, we'll sort of build the case on why maybe we see a little bit of pullback here. And again, is that completely reasonable considering the run that we've been on? Absolutely. Okay, so I think what we'll do today is kind of build that case. In terms of our heaviest weighted sectors, obviously XLK, we covered that, bottom of the list here. After that, the XLF is the second heaviest weighted sector. That one's right here, up 0.8%, so that was pretty good. And then the XLV is also towards the top of the list, up 1.43%. Let's go ahead and check in on some of these charts, again, just to make sure that we know where our risk kind of lies anyways. The XLK is doing phenomenal, right? Remember that in past videos, we weren't quite ready to call it bearish at and around this area here, and, what a good move that was. Literally not giving us that lower low kind of indicated that maybe the move was higher. No one could have known for sure, but obviously not getting overly aggressive to the downside was the correct choice there. Now that we're back inside of this prior range, this one right here, and now that we've certainly put in a higher low from the daily perspective like this was our prior high, this is now a new higher high, we can afford, once again, a higher low pullback. So not really concerned about the XLK being a huge risk at this point in time. If it does want to pull back, what would be the ideal area to hold? Simply the back test of this prior point here at the 154.86, call it 155 for round numbers sake, and or the blue line, the daily 50 SMA. So no big deal here in the XLK. Let's move on over to the XLF. This is obviously breaking out of its prior range. That's this one right here. And again, can this pull back? Absolutely. I mean, we've broken out of the range. It wouldn't be unreasonable to see something like this, retest this as support, and then make a new higher high, right? So we're all good here in terms of the top 2 heaviest weighted sectors, and tying this into that beginning portion where maybe the S&Ps pull back a little bit. Wouldn't it be something if the XLK pulls back, gives us a higher low, the XLF pulls back, gives us a higher low? That would obviously mean that the broad market would likely do the same, and still it wouldn't mean that the charts are falling apart, right? So be prepared for that. We've certainly had a number of days in a row, we'll count them when we get back over to the SPY, but that have been straight up, right? So a little bit of pullback here would not be the end of the world. Let's take a look at the TNX while we're talking about financial things. Obviously, this is moving up and higher away from that 1.5, which again, it's not quite adding up to me why the tech sector is responding so well, even in a higher interest environment. However, as we know, the financials doing really well. Okay, so that push and pull is still going to be at play here. Look for this to continue to, I guess, grind higher now that we're up and over 1.5, especially with the potential taper coming in around November 3rd. Okay, so keep that on your radar. Obviously, the tech sector won't like that too much, but we'll see if the fundamental reasons for the market going higher and just forecasted growth perpetuates the higher tech sector. Okay, so that's what I would kind of watch out for. But just knowing again that the interest rates are creeping higher, and at some point there has to be, there will be a breaking of the last straw on the camel's back. I don't know what the exact saying is, but you get my point. Once these get to a certain point, the QQQ is going to say enough is enough. Like the rates, are hurting us to the point where we can't continue higher. Okay, so just keep an eye on it in the background. Again, come November, I think it might start to be a little bit more important. Let's check in on the XLV now for the healthcare sector. Just see what's going on here. Obviously, we know that this was the weakest of the big 3, right? Putting in 2 equal lows here. Again, that's where you start to be on the lookout for, is there going to be a reversal or a breakdown? So since we held it as 2 equal lows, we have now set a new higher high up above this one from right here, correct? That's technically also the neckline of the double bottom, if you want to count it like that. So to me, again, just like the rest of the sectors we've seen so far, this could certainly afford a pullback and still be technically in a new daily uptrend as long as it's not too deep, right? For me, it would have to hold on to this neckline area. So let's throw that on the chart at about 128, we'll call it for round number 6. So XLV, again, just like everything we've covered so far, could handle a pullback. I'm not saying it has to happen that way, but it wouldn't be the end of the broad market. Let's take a look at volatility while we're looking behind the scenes here. So VIX, and what I want to point out here is how, I guess aggressively we're coming into the floor at and around this 15 mark. Notice how it's been like basically straight down into it. It wasn't really this sideways kind of thing like this. It was from here up above 2050 straight down to the floor at 15. So I'm not saying volatility has to pick up here, but remember what happens as we start spending more time down around 15 going sideways, right? As we're getting closer to that floor at 15, the complacency effect, as we like to call it, builds, and any sort of pullback in the marketplace could lead to a spike in volatility. And now that we've, basically found the floor at 15, I would say be on the lookout for that to come via a liquidation break. So what do I mean by that? Let's take a look back over at the SPY. Obviously, we've discussed this in the weekly watch list on Sunday, but I mean, not the greatest structure, no surprise here on this move higher. So a liquidation break could be the thing that sort of gives us that market pullback, so to say, without totally destroying the structure. Okay, so if we do get a liquidation break, what are the areas to pay attention to? Well, technically, there's a small gap in here around that 450 to 451-ish mark. Basically, you can see that level is right through the middle of it. So watch out for that. But really, it's all about the gap underneath that and then the 50 SMA, right? That's a pretty aggressive liquidation break, to be quite frank with you. And I'm not anticipating that it goes all the way there, but a little bit of liquidation break could easily take us to fill that gap there. And again, liquidation break just simply means that if people are getting too long here, long, they're just expecting this to come back up and blast right up through these highs, then as that doesn't happen, if it doesn't happen, right, because no one can technically know exactly what will happen, but if it doesn't happen and all of those people close out of their positions, aka sell at the same time, then you're likely going to see something like this, a very sharp move to the downside based on people liquidating longs because they're late to the party, okay? So that's kind of all that means, and I would start to be on sharp lookout for that inside of the S&Ps, noting that we've talked about everything. Again, weak sectors are kind of leading this charge up higher, at least in today's session, as well as we have some of the stronger sectors lagging. We also have the VIX down at the floor, right? So if that does spike, all of these things, as we can sort of imagine, could come together to form this perfect storm for the liquidation break. So that's what I'm thinking about here in the S&Ps. Obviously, to the upside, it's all about the blue dashed line, which is technically the all-time high at 454. Okay, so keep that on your radar to the upside. Let's get on over to our market internals now. If you're not familiar with this screen, go ahead and get familiar. Top right-hand corner is going to tell you what this is all about, how you can set it up, and how it'll help you make better intraday trading decisions. Let's go ahead and start off with Monday, because I think this is kind of the interesting thing at play here. Note that on Monday, the S&Ps saw a very muted day. Look at our internals on Monday, noting just the cumulative build down here was actually negative on Monday in the S&Ps, although we had a strong day to the upside. Now, what was that all caused by, right? If we sort of clean this up, I have this preloaded over here. Look at the SPY versus the Qs side by side on Monday, right? So Monday is obviously this day here. Big green day in the S&Ps, engulfing the prior day's range. But in the QQQ, that's where we really got out of the range first thing in the morning, and I think that's what dragged the S&Ps higher, okay? So the tech sector was in charge for some time, and as we've sort of illustrated through our sectors, the baton has been passed, okay? So the XLU, the XLRE real estate there has sort of given us this little boost here, but look at what tech is doing, the QQQ, and again, we'll get into the Qs in just a moment, but sort of lagging on today's session, whereas the S&P was completely breakaway to the upside. So again, starting to raise a little bit of a question mark, like, are we starting to get to that point where, again, we're a little bit overbought here in the short term? That's sort of my concern, at least with these S&P charts, okay? Let's go back on over to our internal screen here where you can see, again, strong read on today's session, certainly on the up day here. You can see also that we had a really good ADD and solid cumulative build down below in the tick as well, even though, and again, this might be some foreshadowing here, look at what happened on today's session, right? You can see it was a straight shot out of the gates, good consolidation into the afternoon. This is exactly what a liquidation break is. See how all of these candles top out at the same area? That's people trying to get long here, trying to time this breakout for the next leg higher, and when it doesn't work and all of these people fold on their positions, aka sell, that's what causes this big movement to the downside. Now, this was a smaller instance of it on an intraday time frame, of course. This is a 15-minute chart here, but I do think it could happen from the daily perspective, as we mentioned in that S&P analysis. So please just keep a careful eye on all of these things as we move into the remainder of the week. Let's actually, I have one thing to announce before we get into the market profile. If you're interested in those scripts, right, all the cumulative builds, you can see down here the cumulative tick and the breath bubbles, okay, notably for your New York Stock Exchange and NASDAQ, I did get those coded here for the TradingView platform. So if you're interested in this stuff, tradebrigade.co/trading scripts. It's popping up on your screen right now, but do know that these indicators are now available for TradingView if you're interested, all right? Let's get on over to the market profile as promised here. And what I want to do is just walk through some of the structure that we've seen so far and just, again, sort of build that narrative for why maybe a liquidation break could happen, okay? So obviously today's session, not a whole lot to talk about other than this area right here. That's where that failed breakout was and the liquidation break came from, right? We just saw that on the 15-minute time frame chart. That area to pay attention to is a mechanical level. It's at 45.30. Okay, so please be aware of that as an upside breakout point. If it breaks again to the upside, you are just going to be looking at all-time highs. We'll check back in on that when we get back over to our regular charts. In terms of what's unfolded in the past, though, which again builds the narrative for why there might be some weaker hands in the marketplace who could liquidate, aka giving us that move lower. Look at what happened here. Okay, so late day spike on what was that, Tuesday, accepted into today's session, Wednesday's session, very, very nuanced thing. And notice exactly where H period comes down. That's that liquidation break. It came down into the spike, but never came back down into the prior day's range. That to me is very nuanced. So basically anyone who bought this area right here is a very astute trader, I would imagine, and therefore they're going to have a very technical stop. Their stop is likely under today's low, basically right around in here. If it goes, they're just going to say, you know what, didn't work, didn't get higher, so what, I'm going to bail on the trade. That's the first thing that could lead to low. Okay. The next thing I would point out is look at the structure from this day. Very, very thin. Oops, let's grab the other tool. Very, very thin in here. Okay. So thin profiles often mean emotional buying or selling. Let's continue lower. What else do we see here? Again, a very thin profile. Look at this. Okay. So you get all of these A prints here. Those are single prints, right? That's basically people just buy, get me either out of my short or get me in on this rally, right? So again, very emotional buyers, people who will likely have weaker hands. So if we come down, fill the gap underneath, and then we break down what I would say is this level right here. You can see that it's a prior high. It's also the top end, or excuse me, bottom end of the meat of the profile here. If we start to take out this level at the 44.67, then I would imagine all of this sort of poor or thin structure underneath gets taken quite easily, okay? And the next one, we can just keep walking them back. And again, I'm just sort of trying to illustrate the structure that is below us, okay? Same thing here with the late day spike, never tested. Let's go ahead and check back in on that, right? You can see, here you go. If you extend that to the right, it was just barely tested. Okay, so we'll give it a little bit, but never really tested or confirmed as fair. Obviously, it was deemed fair because prices moved away, but never tested. And if we go lower, again, look at the thin nature of this profile right here. Basically, no volume was traded in that area. So these are all the things that I'm just thinking about here inside of the market profile, inside of the ES futures, and what might be, you know, sort of a house of cards, if you will, inside of the marketplace right now. I'm not saying that we have to go all the way down there towards the lows, but I am saying that the people involved in this market at this point in time don't strike me as people who necessarily have strong hands, right? They're very emotional players, and that to me is a perfect recipe for that liquidation break, which we have been discussing throughout the entirety of today's video. So back on over to the platform, I don't say any of this stuff to scare you or say that the market's going to crash. It's just nice to know where your risk kind of lies. And again, I hope today's video has kind of been really thorough in explaining my feelings on, again, the sectors, the rotation at play, the relative weakness in tech here, and even the structure that we just looked at in depth on the market profile. So again, any of these areas to pay attention to underneath are likely just gap fill areas. We have this one here. Anything underneath that, you're looking at basically the daily 50 SMA, this gap underneath there. I'm not saying, again, that we go all the way to this one down here, but again, you have these levels mapped out. These are the places to be watching for if we start to see a very aggressive and fast, right? That's a hallmark sign of a liquidation break, very fast sell-off come in the coming days or weeks, right? Just be prepared for it. And you're going to know if it's short-term sellers, basically, because it's going to get to one of these places right here, and then it's going to turn on a dime and head back up. And you're going to say, what the heck? Why did it just stop here? It looked like it was going to go lower. It looked like it was going to do something like this, right? It's going to be really, really nasty, really, really fast, and it's going to turn at a very nuanced place. And hopefully this video gives you the edge in knowing where some of these nuanced places are, okay? So heading over to the QQQ, I know this has been a very sort of passionate video, I suppose, about the market here, but I just love this stuff, so we'll see what happens. But ultimately, QQQ, as we know, broke the resistance trend line up and over the 50 SMA, obviously resting bar during today's session, whereas the S&P was green. If it does continue higher, you have 379 and then the all-time high. Any sort of pullbacks here, it's all about this right here, daily 50 SMA, blue line, and the 369, because it was the prior breakout point as well as the breakout from this day right here. That's kind of that Monday session where we noted there was some divergence between the two big players here, the QQQ and the SPY. That's going to kind of cap it off to the downside. Anything underneath does technically put into play the gap underneath. However, you know, is it likely that we retrace all of this to the downside? I would argue it's not likely, at least into the remainder of the week. Okay, so that's what I'm thinking in the Qs. IWM to wrap up the broad market. Again, not a whole lot to talk about here. We are back above this resistance trend line, so that is noteworthy. We'll see if it does lead to this time a more firm breakout. Remember that we did gap up and over it here, could not hold it, obviously fell back in. Let's see if this time is the real deal, and we do come up to test the top end of now what it feels like the forever range, right? It's really just something like 8 to 9 months. Okay, so we'll see if we can make it back up there towards the 234.35. That would be a more definitive break of this resistance trend line, so on and so forth. But as it sits right now, just still signaling that neutral risk until we really get going in one direction or another. Let's wrap up the video here. I know it's been kind of long-winded, but with SOFI as our first trade idea, this one is looking fairly interesting as a bull flag. Earnings are sort of further out here, so not a big deal. But what you'll notice is nice consolidation here into this sort of flag. If we can take out 21 with some strength, look left. Obviously just a big chunk of consolidation in here. Moving through that puts into play the upper target at 23.25. Obviously not interested in the trade if we never get the firm breakout up and over 21, or if it wants to break down underneath this area here. So 1983-ish based on this prior high and pull back from today's session. If it dribbles down underneath, this trade is kind of off my radar. Next one is going to be on DIS for Disney. This is actually a bearish trade, and I'm sure without even really zooming in, you can kind of see this already. What do we have here, right? If we do something like this, big flush point zone. I'm just going to draw this in as a zone because it's not quite perfect, but 3 days in a row now, lower highs and equal lows. If we start taking out this 170-ish zone, basically this in here, with some more strength as we head into earnings, look for much lower here in Disney. Again, you have all of this overhead supply here who will be wrong. Again, think about these people as just buying shares, kind of accumulating positions, right? So on and so forth. If it gives up this critical area of support, boom, a lot of those people are probably going to liquidate as they realize they're not going to get paid from this Disney trade. The downside target would be first here, kind of this area, we'll call it, at the 160, and then obviously the gap fills down to about 157.50. Again, fairly aggressive to the downside. You're not looking for that in a day trade. However, certainly could happen over the course of a week or two as we head into earnings, if again it does break down underneath that zone. Last trade idea is on UPST for Upstart Holdings, and this is a bullish trade idea on the pullback. Okay, so we had a breakout trade, we have a bearish trade, and here's a pullback trade. Basically, looking at this prior area of resistance, seeing if this wants to pull back a little bit further. It might not even get there again, so you have to play this one kind of by ear, keep a close eye on it. But if it wants to come into 341.82, call it 342 for round numbers sake, and start giving us hammer candles, right? So things that look like this, indecision dojis, basically things that make us question, okay, is this pullback ending? Can we flip long over the highs and then retest the all-time high in here, up and around that 400 round number? That to me would be a perfect pullback buy in anticipation of a pre-earnings run-up. Obviously underneath this 340-ish zone, not so interested in the trade and would really be patient to see what the next technical setup would be. You don't want to be involved if it does something like this, because what did I just draw, right? Technically shoulder one, head, shoulder two, neckline is here. A breakdown does put lower into play for Upstart. So again, really be patient if it does want to break down underneath 340. Don't, sort of just chase this one on the pullback thinking that it's magically going to reverse. I would wait for some structure to build out. That's going to wrap up this week's episode of the Midweek Market Update. If you enjoyed the video, I certainly enjoyed making it today. I don't know if my voice sounded different or more passionate, but I loved walking through all that stuff with you guys. Let me know in the comments section. I certainly love to hear some feedback down there. Don't forget, you can just give the video a thumbs up. I appreciate that as well. Subscribe to the channel. Check out the second channel that is linked in the description. And don't forget, the Trading View indicators are available on the website. That is tradebrigade.co/trading-scripts. That's going to wrap it up. I wish you all a green trading week.